Ladies and gentlemen, welcome to our weekly investor update. My name is Dan Theok, Senior Vice President of Investment Banking, and I'll be your host today. For the season finale of our Investor Update series, we'll be bringing you our quarterly review alongside with panelist Assistant Sales Manager Asha Smelly. Welcome, Asha.
Glad to be here.
And Investment Banking Analyst Justin Scott.
Always a pleasure.
Welcome, Justin. Justin's new to that role. He's transitioned to the investment banking team, so special welcome there again. If you're a fan of the content, then don't forget to subscribe and hit the bell to stay up to date with the channel. We upload content just like this every week. And that's why if you're looking to embark on your very first investment journey, you should take the first step with Mayberry. So follow us on social media at Mayberry INVJA to learn more about how you can get started today. Well, as promised, we'll now begin our presentation, and we're going to start first up with Fesco, which will be done by Justin. What do you have for us, Justin?
All right, good day, everybody. So first up, we have Fesco. I'm sure you guys would have known Fesco, right? It's one of the leading fuel retailers, fuel marketers that we have in Jamaica, right? At this point, they've been getting very popular ever since their IPO just a couple of years ago, and they have been growing at an insane pace. They've been growing, they've been expanding, and they're moving out into new product lines. As you can see right here from the revenues, it's increased by 210% from $4.3 billion up to $13.4 billion. Now that's an insane increase that the guys down at Fesco are very deliberate. They really know what they're doing. They've been moving into expanding the stations. They just opened their 18th station in Ocho Rios recently. And then the executive, Jeremy Barnes, has also stated that there's the intention to open at least 3 to 5 more stations over the next couple of years, in addition to the LPG section that they're trying to move into coming up soon. So Fesco wants to move into LPG, which is providing more cooking gas, and they've been spending quite a bit of money on that recently, up to about $900 million as the last time we heard from them, and they've been aggressively looking into that. So they want to ensure that they have everything well and sorted by the time it's time to roll out. There's going to be a lot of comparisons made to Regency Petroleum when it does list, but I want to make a distinction that Regency is an LPG company that's moving into petrol, and Fesco is a petrol company that's moving into LPG. So it's not exactly the same level of comparisons that people are going to be making coming up soon, but I just want to look into that. So Fesco has been growing quite a bit, as you can see from the asset growth from $1.2 billion up to $3.2 billion. If you look into the next slide that's coming up, you can see how the profit has been moving, which is extremely impressive. From the third quarter in 2019 with only $73 million, right up to the most recent second quarter when they did $129 million, guys. So the earnings per share as at the half year from the most recent reporting was 11 cents per share, right? If you annualize it, that's 22%. And bear in mind, this is a company that came at 85 cents per share when they IPO'd not too long ago. So that's really impressive from a company. And their growth is only getting further and further. As you can see by the stock price, this one was moving parabolic earlier along last year into this year, getting from a low of $2.9 at the start of 2022 to a high of $7.92. And I know a lot of you guys, especially retail investors, would have been benefiting from that. I know I did. And so this is definitely something that we want to see more from Fesco as they start to increase their operations, as they start to distribute more, and as they start to really fine-tune their operations. Currently trading at the price of $4.82. I do think Fesco is definitely still attractive, especially as you get further and further in their expansions.
All right, so Justin, I agree with everything that you said about Fesco. The only thing that I would add is I'd like Fesco to open more company-owned gas stations.
Absolutely.
That way, they would retain majority of the profits, if not all of the profits. Beechwood, as well, Beechwood is the only one that they currently own now, and I've never been to Beechwood, and it's not full. So expecting more company-owned gas stations to increase their profitability.
Absolutely, I agree with Asha. There are more company-owned stations would really set in that profit for Fesco. You guys would see it balloon absolutely more and more as they do that. Even just the mention that they're going to open another company-owned, company-operated station will do wonders for the price. I can tell you that.
Okay, up next, let's keep it going with Justin, Express Catering Limited.
So to keep the ball rolling, next up we have Express Catering Limited, and Express Catering is the company that provides all of the catering services for the Sangsters International Airport, which is the busiest airport in Jamaica. and they're basically always reviewing the franchises and outlets that they have. They're adding brand new concepts. As a matter of fact, they'll be having 2 brand new ones opened in the early parts of 2023, and it's going to be a great product offering. It's going to be diversifying what they have available, and it's going to try and to really capitalize on the growth in tourism that we're going to be experiencing. So they had some issues moving from 2020 up to now. However, I really do believe that the rebound is coming up, especially given the fact that tourism is really shooting back up to where it was above 2019, and it's going to only be getting better from here on out. So with the addition of 5,000 hotel rooms that are going to be built within Jamaica, we're going to be having a lot more people flying in, a lot more stopovers, and with the expansions that's happening over in Sangsters, there's a lot more room for people to cater to. So India has actually come out and stated that they're going to be expanding their operations so that it's not just for when the arrivals come in, but they're also going to be providing for the meet and greet people, those who come to pick up. So there's opportunity for them to buy food while they wait, to patronize the business, and just really increase the revenues for the company. So revenues have increased 35% from 3.6 million USD to 4.9 million USD, and it's translated down to a 16% increase in net profits from 565,000 to 652,000. And the current PE is 43.95 times, which is a little bit rich, but I do expect them to continually improve upon that as these new operations take place and as more things keep being added to the ECL roster. Especially considering that the ECL is now considering to expand further from just the Sangsters International model to continually providing the franchises to a lot of the other places within the island, as Ian there would have stated earlier this year. So things like they'll be working much more closely with focus brands to bring things like Aunt Annie's Pretzels, Cinnabon, and just really to tackle the new emerging market trends and tastes that have been coming up, which he would have been seeing from his ventures with Starbucks. It's a great idea. So that I'm sure he has the information there to support the interest that they have to be supporting these kind of companies. If we move into the next slide right now, you see the profit movement. There was that rough patch from 2020 onwards, but I do believe they're getting right back into the throw of things. They haven't resumed back to the pre-pandemic profit margins just as yet. However, I am confident in the growth from there. Tourism is one of the main things that we have out here in Jamaica, and it is going to be continually relied upon, and there's a lot more growth to be on there. If you look at the share price movement, it has been trading steadily within a band of between $4 to just about $7, and I believe that right now 4.5, as long as they keep continuing to do what they're doing, to expand their growth, then we have a lot more to see from ECL. All right, so on ECL, Dan, is there anything you'd like to add on ECL?
Yep, I think that's a fair review. What I like about Express is it's deeply tied to tourism. Their sales is deeply tied to stopovers and traffic through the airport. We know that the traffic has not gotten back to pre-pandemic levels. You mentioned the 5,000 hotel rooms under construction and the fact that tourism in Jamaica is set to boom. So we've seen the return of the Dolphin Coves and the CPJs. It's just natural, I think, coming in the next quarter as we get into the December period and beyond, that we're going to see the profit of ECL booming, the PE therefore normalizing, and I would be surprised if this stock isn't at $6 by the end of next year. So I think it's a great company. Had huge challenges throughout the pandemic, especially because they depend a lot also on the tourism, and that stopped when the airport got shut down, basically. So I look forward to 2023. I think it's going to be a great rebound stock in that year. Okay, well, thanks for that, Justin. Appreciate that. Up next, Jamaica Broilers Group. Okay, and we're going to look at the 6 months to October 2022, and this is, folks, one of my favorite stocks by far. If you don't have this in your top 10, then you're not a serious investor in my view. So just looking at what's happened in this half year, you can see sales up by 31%, up to $45 billion. That flows into healthy gross profit increase as well too. Distribution costs are only up by 18%. And the result is a 153% increase in operating profit, slight increase in finance costs, but at the end of the day, net profit from continuing operations, that's up 135%, folks. EPS as well, naturally up by 135% to $1.73. At $30.78, this stock is trading at an 8.54 PE ratio, which is below the current market average of 10 times. So this is trading at about a 15% discount to where it should be, in my view, based on historical earnings. And I think when we jump to the next slide in a second, I'll demonstrate that it's trading at a greater discount. But just looking again at the highlights, the shareholders' equity up to $23 billion, folks. That's an increase of 20%. Total assets up to $66 billion. That's an increase of 23%. So very strong balance sheet. These guys have over $3 billion in cash, grown by 30%, huge growth in the profit by 135%, and the best is yet to come. On the next slide, we can see what's been happening with the profitability. And so here it is, 4 quarters back to back, where the quarterly profit is approximately $1 billion per quarter. So their profitability is now better than pre-pandemic levels. But we talked about tourism coming back, Justin. And did you know that JPG depends a lot on tourism too? So perhaps 15% of their sales comes from tourism. And so that's why they had depressed quarters in the previous 5 to 8 quarters going back during the pandemic. So we saw them do a big rate adjustment in June thereabouts, and I saw that and said, well, if they're reducing their prices, and they're the first company to do such a large reduction, and I want to congratulate them for that. And even after doing that price reduction, we see where the profitability is coming. So with the new hotel rooms coming and folks eating more food, and the tourism industry consumes more food in Jamaica and alcohol than Jamaicans consume in Jamaica. We have about 4 million stopovers a year. Our brand's all about all-inclusive hotels, and these folks definitely eat food. I'm looking to see even bigger and better things for JPG in the upcoming quarters, and therefore this stock price, I think, is going to go even further. Next slide shows what's been happening with the stock price. Being pretty erratic throughout the last 2-year period, peaking at $36, trading strongly in that $30 band, dropping sometimes down to $26 and then back up to $30. But it has broken out before and gotten to $36. I expect it to get back to $36 within the next 2 quarters. I think you guys want to see the next quarter and see that they repeat that $1 billion performance. People will believe that it's really back. And we see that stock back up at $36, which will be closer to the market average PE. Again, remember, folks, we're in a high interest rate regime. With the high interest rates, the market PEs have come down to 10 times on the main market side. I expect those PEs to trend back up to 12 times by mid next year as interest rates peak and start to fall off. And 12 times with this level of earnings, this is easily a $38 to $40 stock. So I really like JPG. It's rock solid, very strong brand. There are only 2 big companies in the poultry industry in Jamaica. JPG is the bigger of the 2. In addition to that, they're now bringing in about 40% of their revenues from North America, where they're showing really great growth. So that's a huge advantage of JPG over CB. And you can't get CB to buy. It's a private company. So you definitely want to have JPG in your portfolio. It's a great company with great growth potential, run by a great management team. Hats off to Chris Levy, Ian Prasad, and the entire team over at JPG. We love what you're doing in terms of managing the balance sheet, your financing, the cash, etc. It's really a great company, strong brand in Jamaica. Hard to bet against JPG. Guys, definitely go and get yourselves some JPG. Asha, any thoughts on JPG?
Yes, Dan. So while you mentioned the almost $1 billion on average quarterly performance, you indicated, you didn't indicate that it was only from 2 areas of operations, Jamaica and North America, remembering that they also have Haiti that has not been producing as much. So we're seeing where they have severed ties with Haiti. So once that loss is off their balance sheet completely, then we will see the true performance of JBG and transitioning to the higher price movement into 2023.
A great point, Asha. It reminds me of Seprod when they dropped Golden Grove and removed that loss-making entity from the business, which meant the profitability of the overall group improved, and I expect the same thing from JPG. So great point. Appreciate that insight. Okay, up next, Spur Tree Limited, which will be presented by Asha.
All right, good afternoon, everyone. So we're looking at Spur Tree Spices today. We're looking at the 9 months ended September 30, 2022. Looking at their turnover for the year or for the 9 month, we are seeing a 9% increase in sales, up from 614 million to 672 million. Browsing further to the line items for the net income, we're seeing a 66% increase in profits over the same period. The profitability has, as mentioned by the company, is stemming from improved cost efficiency measures that they have undertaken, several projects that they have also invested in, as well as expansion of infrastructure, more square footage for them to double their capacity. We're looking at the key statistics. We're seeing them trading at a current price of $3.22. That's about 222% up from where they first started trading this year when they were listed. So if it is that you would have purchased and still held Spur Tree up to December 13, you would have received or have a profit of about 222%. The PE ratio is currently at 38.95 times. It is trading a bit richly for the junior market, but we have to take into consideration that this is a company that is high in its growth phase. We have seen where they recently, which was last year, 2021, purchased or acquired a company called Exotic Jamaica or Exotic Products Jamaica, which is responsible for the production of canned goods, namely ackee and callaloo. We've also seen announcement of another recent acquisition of Canco Limited, which trades as Linstead Market, and their main product is also canned ackee and canned callaloo. So we're seeing where Spur Tree is actively pursuing partnerships or acquisitions to increase their market share in the canned goods area, specifically for our products that is loved by persons in North America, where about 90% of their revenue stems from. Scanning over to the quarterly profit movement slide, we are seeing positive profit movements over the past 7 quarters. You would be seeing a slight reduction since Q1 of this year, and that has been stemming from issues that they had with their main distributor in North America. Since then, they have acquired new distribution partnership in North America, as well as a partnership regionally with massive distributors to ensure that their products are also marketed to the CARICOM territory. So those partnerships and strategic movements that we have seen Spur Tree made is all in line for their end goal. Increasing market share, ensuring that their product is recognizable, whether regionally, locally, and internationally, stemming from North America to Europe. The stock price movement, as alluded to earlier, was trading at a low of $1 up to a high of $4.31. They have maintained a band, but with high interest rates, we are expecting that stock prices will somewhat be depressed. However, as I mentioned prior, if you had the stock or held the stock since IPO or since listing, you would have been up 222%. The outlook for Spur Tree is positive. They are consistently improving their operations, streamlining their processes, and ensuring that they have adequate space to ramp up production. So as it stands, the outlook for Spur Tree, as mentioned prior, will remain positive leading into 2023. So based on the overview of Spur Tree, Justin, what are your thoughts on the performance leading into 2023?
All right, thanks for that, Asha. Yeah, man, definitely. I love Spur Tree for sure. So as you would have brought before, they recently acquired Linstead Market or Kanako, and I wanted you guys to think about all the ackee packaging or ackee companies that you probably don't know a whole lot of them. Even if you might be in the industry. So there are very few out of them. Spur Tree is definitely out there acquiring as much as they can. They are really taking over the market share for that. And with the arrangements that they have with Grace Kennedy, I can only imagine a lot more things are going to come out of that. It's a great opportunity for them, especially to go further and further into the export market, really hitting those European markets, the North American markets, and providing all of these kind of products for them. It's a great opportunity. As far as they go directly, Spur Tree products are still a big name brand, still a huge staple in many households locally and overseas, especially overseas. And so we can only see more and more growth for them. I would love to see them perhaps come back to market, maybe raise a little bit more money, and to further the expansion into that, maybe go into bigger warehousing spaces, increase the production capacities, maybe another acquisition. I'd love to see that too. But yeah, Spur Tree is great. You know, so it's a steady pace of growing, but I'm optimistic on them going forward.
Okay, thanks for that, guys. Up next, we have Fontana, which will be reviewed by Asha. What do you have for us, Asha?
So we all know and love Fontana Pharmacy as a one-stop shop for all our pharmaceutical needs as well as consumer items. So looking at their 3 months ended September 2022, which is their first quarter, we are seeing revenues increasing by 26%, up to $1.64 billion from $1.3 billion last year. We're seeing also improvements in their gross profit, up by 33%. Hovering to the net profit line, a 43% increase was reported for the first quarter to $87.5 million. Their asset base has also increased impressively over the 3-month period to 20%. We are also seeing a current stock price of $8.24, which is trading lower than where it started the year at. However, the PE is 16.24 times. So as Dan would have mentioned prior, the junior market P is about 16 times. So it's just slightly trading above that ratio, but no cause for concern. So why Fontana has increased? What caused an increase in Fontana's net profit margin? So we're looking at a reduction in international freight rates, which was a problem for a lot of companies that solely benefited or their product line was based off of imports. So freight rates have fallen, so that means that their margins are a little bit better. We're also seeing increase in sales for the September period. Back to school is something that they did. Back to school sales is something that they did not have over the past 2 years. So at the end of September, at the end of August leading into September, we saw where majority of the schools were open and such that persons needed to utilize the resources of Fontana to ensure that they were prepared. Fontana's quarterly profit movement has been positive over the period under review. The first quarter is always a little bit better than Q3. However, their second quarter is where we're expecting to see the bulk of their revenues. The quarter coming up, which is Q2, captures the festive season. So starting in October, ending in December. So we're anticipating that Fontana is going to capitalize on all of that. Also to mention, the opening hours of the stores has extended back to the original 10 p.m. So that is providing more shopping hours for patrons to support the organization. They also increased their warehousing space. So that would mean that lead time for products that you all love would be minimized so that they will always have inventory for their fast-selling items. Looking at the stock price history year to date, we are seeing where Fontana started the trading the year at $7.15, and they're currently almost back to where they started the year at. However, there were some fluctuations up to $11.92. What Fontana has in store for 2023 is the opening of their 7th location in Portmore, which is one of the largest cities in Jamaica. When that comes on stream, we're expecting that the price movement should increase steadily, as well as revenue should also increase steadily. we have seen where the latest store that they installed, which was the Waterloo, once that came on stream, we saw an improvement in profitability. So with location 7 set to be open in summer of 2023, we're expecting the same level of trajectory for their revenues. Dan or Justin, any comments on Fontana?
Yep, Ashley, this is definitely one of my favorites on the junior market. I think it has great potential. You know, I bought this stock. You couldn't get it at IPO. I bought it at $3.83, watched it go to $8, you know, pretty quickly, and still held because I do believe in the same way the stock jumped from, you know, 380 to 8 after the new store opened at Waterloo. I'm expecting with the Portmore store, which has the potential to be even bigger, you know, I'm expecting the stock to go from $8 to $14. It's because I expect the earnings to grow by a 30%, and I expect their EPS to improve by 50%. So I'm really looking forward to the new store and expanded warehouse space, which should be completed by March, April, and open by June. So again, you know, here's another stock that if you have it, hold it, and if you don't have it, it's not too late to buy it, because once again, with the growth in their revenues through that new store and PE ratios increasing from 16 back to 20 as interest rates come back down, I think that's the perfect storm for Fontana. I'm predicting, you know, $14 by next year, September, for this stock. So it's not too late to get it. It's a great company. Again, good management, run very solid, raise financing really cheap, manage their balance sheet really well, growing it nice and strong. Kudos to the team at Fontana. Great stock to have. Thanks for that. Last one for today. And then Justin, Ashley, get ready because I'm going to ask you about your favorite stocks for next year coming up next. Last one for today, Wigton. And let me declare interest. I'm a board director at Wigton, but we're going to speak to results in the public domain. So here's the financial highlights for the 6 month ended September 2022. And we see first up, revenues up by 12% to $1.3 billion. Gross profit up even further by 18% to $930 million. Admin cost, you know, being very well contained by 15%. Finance costs also being well contained by 6%. Put that all together, that's a 61% growth in profitability, folks, from $242 million last year to $390 million for this half year. Total assets pretty flat because there's no expansion happening yet, although we did hear Cabinet announcing that Wigton has been granted the right to repower their phase 1, which is about a third of their revenues. And so we know Wigton's on their way now with the negotiations with JPS and the OER to get a new PPA executed so that they can put out that new replacement power plant. So that augurs very well for the future of Wigton to know 1/3 of their revenues have been protected, typically under 20-year long-term contracts. That contract was set to expire within the next 18 months. They've gotten the right to renew that contract, we presume, for another 20-year period. And so that augurs well for Wigton. Current share price, 55 cents. This stock IPO'd 3 years ago at 50 cents, went up to as high as maybe $1.20 very momentarily, traded at 90 cents for a very long time, has now come back down. I think the market's a little bit confused about the future and the growth prospects for Wigton, but here you go, folks. We've seen the first big award that they've gotten. Jamaica has the ambition to get to 30% renewable energy by 2030, and I've heard Prime Minister Holness suggest 50% could be a target. At 30%, we need to double the amount of renewable energy capacity in Jamaica. At even 45%, we need to treble. We only have 15% of our renewable energy coming from, we only have 15% of our total energy coming from renewables currently. Wigton Windfarm is the largest energy provider in Jamaica and indeed the largest renewable energy producer in the Caribbean. So I look forward to future RFPs, minimum 200 megawatts to 300 megawatts. To put this into perspective, Wigton only has about 67 megawatts. So it has the potential to double or triple its capacity going forward. They're sitting down on $4 billion of cash, just waiting on projects, good projects for them to bid on. We see them expanding into other clean energy type projects. So don't just think of Wigton as a wind farm. We see them taking an investment in an EV company, and we see them positioning themselves to do a lot other types of clean energy projects. So it's hard to bet against Wigton and the team that they have over there. Again, at 55 cents, it's trading at 10 times PE, so it's sort of on average with where the market is, but it's the future growth potential of Wigton that gets me excited about it. And, I think with new projects coming online and with RFPs to come, I really think this is a great one to have in your medium to long-term bucket. There's no reason why this stock will not double in the next 12 to 18 months as they get on with their expansion business. Next slide. We see what's going on with the profitability. Some win variability, some challenges you've noticed. Some quarters, like 4 quarters ago, profit as low as $35 million. A lot of the output is dependent on the variability of wind, but what we've seen in the last 3 quarters is very good wind production. Last quarter in particular, I think wind production was up by over 6%. So the equipment's working. They need the wind to turn the turbines to produce the energy. And what we're really looking forward to is further growth and expansion as the government tries to get to their mandate of at least 30% renewable energy in 2030. This is the only profitable, publicly traded renewable energy company, has a market cap of like $6 billion and $4 billion in cash. This one's a no-brainer in terms of a good buy for folks. Also, it's a no-brainer in terms of its medium to long-term prospects with Jamaica's ambition to try to double or triple the amount of renewable energy that they have in the space. So with that brings our review of our 6 stocks for the quarter to an end. I think they're all great companies with all great prospects, but let me ask each of you individually, in this year, 2022, what's been your best performing stock? And for the next year, 2023, what's your best guess or what best choice? Justin, you first.
All right, so for me, I think I'd definitely have to go with Supreme Ventures, which has increased by 67% year to date from starting off at $17.8 to over just about over $28, $29 right about now, and it only has more to go. Right now, we are in the World Cup season, guys. Finals coming up very, very soon, and there's been a lot of betting happening. There's a lot of betting around in the general sports space right now. There's a lot of work that's going into, say, Caymanas. They're increasing their technical offerings, not technical, sorry, I mean towards the digital. So they're really pressing to get more and more people online to make it a lot easier to get further into the betting. They have Michaela Financing, which is going to be coming up and up soon, as long as they get approved by the BOJ. I don't see any reason why they wouldn't. But there's a lot of things spelling good news for SVL right now and going forward. And but that's just me for this year. If I really want to cover what I'm going into the next year, I think I'd have to touch on Grace Kennedy, which has traded down a little bit, about 20%, starting there off at $100 to about like 80. It's around $80 now, right? Yeah, thereabouts. But Grace is doing a lot. They've been very aggressive in listing companies this year. I really appreciate them for that. Really developing the market, especially the Judah market as we have right now. Following in some good footsteps, I think we can say here at Mayberry. Yep. But yeah, it's great from them as far as establishing further and further things. Even the companies that they're taking a private equity stake into is very strategic in terms of developing synergy. There are food production companies, so they wanted to buy into Blue Dot to get an idea of consumer mindsets and trends and things like of that nature. They're buying more into companies that's operate in the same space as far as food operations go. And then obviously they have their financial side of things, which is always going to be performing at this level once Western Union is still on their side. So I think it's great things for Grace, and I hope they have a lot more coming. Maybe some big things, maybe some more big acquisitions. I'd love to see that too. But yeah, Grace is looking good for the future.
Thanks for that. Couldn't agree more. SVL, brilliant management over there. We declare conflict, and with the fintech push, I expect bigger and better things for SVL. GK is the giant conglomerate that thinks like small guys looking to expand, and we see them doing lots of deals, and I expect them to do a lot more deals in potential. So I definitely agree with those two. Asha, what about you?
So, Dan, for me, my best performing stocks for 2022 so far has been MJE. MJE is a tightly managed, I wouldn't even say a fund, but it's a tightly managed portfolio of stocks. We have the three, I'd say, the best brains in the market. Structuring that portfolio, we're looking at a stock that has started the year trading at $6.90 and traded up to $16 so far year to date. Closing yesterday at about $13.80 with a NAV of about $15.15. So it's not trading far off from its NAV, and comparable companies that has the same framework as MJE, they're not performing as well as MJE. So I am expecting that prudent management will continue with this portfolio. They're always looking for deals on stock prices and how to best improve the profitability of the company. So MJE is my pick for this year. Looking to 2023, I am bullish on NCB. NCB has been trading below $85 consistently for the past 3 months, which is a steal. NCB, if you would recall, in 2019, 2020, the stock price was at about $216. So comparing 216 to below 85, or even comparing it closer to last year when it was over $100, it is trading at a heavy discount. We have seen where their profits has increased quarter over quarter. Comparing what they did last year to this year, they have outperformed. So I am expecting that level of performance will continue into next year. Can't get it at a better deal than where it is trading now. I saw it yesterday at $81.20, even below the $85 that I mentioned prior. So it is a stock to watch for 2023.
Thanks for that, Asha. I think you're spot on. MJE still trading at a discount to its NAV. They've grown that portfolio by $6 billion year to date. I think we're going to see that grow by at least another $6 billion next year. So I think that's a great buy. NCB, 100% slam dunk, trading below 9 times PE, maybe like 8 times PE at a 5-year low. Folks, you can close your eyes and buy NCB at any price below $90. You're going to come back in a year's time, 4 more quarters. You heard it here first. That stock's going to be at a minimum $130. So from $90 to $130 means, minimum 40% growth I expect in the next 12 months. It's the number 1 bank in Jamaica, probably number 2 in the Caribbean. It's hard to bet against NCB. For me personally, my favorite coming up is probably going to be Jamaica Broilers Group. I think with them getting rid of the loss-making operation, settling into their own, growing the business in the U.S. and seeing tourism expand in Jamaica, I think that's a stock that has huge potential, and I really look forward to seeing bigger and better things from JPG. So, well, that's it, folks. I appreciate it. Justin, I really appreciate your insight. Same from you, Asha. I think it's the first time we've had us 3 together in this combination, and I think it went pretty well. Folks, look out for us in the new year, where we'll come with our top 10 stocks for 2023. All you have to do is follow Mayberry to stay on top of the market. That's it for today's discussions. I'd like to thank our viewers for tuning in today. Your support is always appreciated. And I'd also like to thank my fellow panelists for their insightful contributions. And I'd like to wish everybody a blessed holiday and Happy New Year. We look forward to resuming these discussions in January. Be sure to look out for our updates on our virtual investor forum by following us on social media. We share our live stream dates and our upcoming guests on our official social media pages. So follow us for all things farm-related and click the bell to receive all notifications. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Well, that's it for today, folks. Remember, keep safe, wise investors, and slow and steady wins the race. Goodbye.